Hey everyone, welcome back to Everything Tesla Stock. With the stock market's volatility, you can never be too sure what will happen next on that stock chart. For most Tesla investors, there is a bigger picture when it comes to investing. A large percentage of investors are investing for the long term as well as for the short term. Even in terms of retirement, there are a number of factors that could cause the price of Tesla stock to rise or fall. But based on the stock's historical performance, analysts can make predictions as far as 2030. So, how much will Tesla's stock be worth in 2030? How many shares do you need to have now to successfully retire this year? More information will be provided in this video, but before we begin, don't forget to like, subscribe, and enable notifications to stay up to date on everything Tesla has to offer. Now let's watch the video. In a recent interview, Tesla CEO Elon Musk revealed Tesla's aspiration to reach the goal of 20 million electric cars produced annually by 2030. According to Musk, this goal is a result of the desire to create a remarkable record in sustainable energy and electrification by replacing at least 1% of the over 2 billion fleets of cars and trucks in the world per year. This is a big task for the EV company, considering that the current value of cars sold per year is way below Musk's proposed value. However, needless to say, an increase in Tesla car sales is going to have a tremendous effect on the stock price, especially if things go as far as Musk has stated. But since the EV market is never certain, it's safe to leave room for doubts and unforeseen circumstances. Now, going by Musk's value for car sales in 2030, a bear and bull case analysis is going to help to give a clearer picture of what to expect from Tesla's stock if the prediction does not come true, or if it does come true. So, if you want to know how many Tesla shares you need to have in order to retire by 2030, then watch this video until the end. In a bear case scenario where Tesla makes half of Musk's expected value, we can expect the stock price of Tesla to reach about $3,120 per share. Here's a little calculation for this. According to Tesla stock investor and YouTuber Darren Young, assuming the average price for Tesla in 2030 is about $60,000, then we can expect gross income on car sales to be around $600 billion. If Tesla makes 15 of this value from its non-automotive products, like batteries and robotics, that gives $90 billion, with total revenue of $690 billion, with an earnings per share EPS rate of 15 and a price-earnings PE ratio of 30. Tesla shares could be sold for $3,120 in 2030. Note that we're using a PE ratio of 30, considering that by 2030, Tesla is most likely going to be a mature company, and say Musk's predicted value is actually achieved. That is, Tesla sells about 20 million cars by 2030. Tesla's gross revenue could be as high as $1.56 trillion if its non-automotive products can yield 30 of its car sales revenue, maintaining the same EPs and pay value. Tesla's shares could go up to $11,700 per share. It is fair to say that this is a very high stock price prediction, considering that the stock is currently below $1,000 at the time of this video. But looking on the bright side, if things do go well with the stock, Tesla could actually reach this incredible milestone. However, since the EV market is subjected to different unforeseen challenges, having a base case scenario can make things a little more realistic. Here we assume Tesla sells 15 million cars by 2030, which is still lower than Musk's predicted value. Tesla's total revenue then could reach $1.4 trillion if its non-automotive products can yield 15 of its car sales revenue. Still, maintaining the EPS and pay value, the stock price could be around $6,210 in 2030. Most Tesla bulls are likely to agree with this value, and seeing that the EV maker is constantly trying to boost its market valuation, this stock price could be a very good target that could get some worthy attention. Now we know how much Tesla stock could be worth in 2030. How many shares will be required to retire this year? Retirement plans vary from person to person, so it is reasonable to assume that investors' retirement budgets will also differ. The overall cost of living after retirement will also vary based on lifestyle, location, and personal expenses like health insurance. It can be concluded from this analysis that a lot is expected from Tesla, and that investors who have purchased the stock in their portfolio may be headed toward financial freedom. In related news, ARK Invest CEO Cathie Wood has also made some extremely high price predictions for Tesla stock in 2030, stating that if we take into account a retirement budget plan of $2 million and the expected stock price in the base case scenario, an investor will need approximately 900 units of Tesla shares to retire with $2 million in 2030. Keep in mind that this is a post-stock split value, as the recent 3-for-1 split caused the initial 300 units to triple. Given that this is not the first time Wood has predicted the price of Tesla, this is undoubtedly a very high projection. It's possible that the car maker is about to do something significant. Although this wasn't accomplished within the allotted time, Cathie Wood's 2018 prediction that Tesla shares may reach $4,000 was eventually realized in January 2021. The Tesla stock price may rise to a high level in 2034, a number of reasons. Wood also includes a few of these in her examination, such as Tesla's humanoid robot Optimus. The Tesla robot's user interface was just unveiled by Elon Musk. He claims that the 5'8" robot will assist with menial duties like cleaning and cooking, so that people can concentrate on more fruitful endeavors. Musk also mentioned that there are high expectations for this Tesla innovation, stating that the robot will be worth more than the auto industry and FSD's entire self-driving company. Another invention that could drive the price of Tesla stock higher in the future is the company's robotaxi, which was announced during the first quarter of 2022's earnings call. Speaking about the robotaxi, Elon Musk said the business intends to reveal the car in 2023 and start mass production in 2024. Musk claimed that this innovation will play a significant role in Tesla's expansion, and that the car is essentially designed to have the lowest cost per mile, making it less expensive than a bus ticket. It's no secret that Tesla is making significant strides in innovation, but the business is also working to boost vehicle manufacturing, as seen by Elon Musk's forecast for car sales in 2030. In addition to the 20 million car sales target, Musk disclosed that the company aims to be the best on all metrics. Related to its mission to accelerate the global transition to sustainable energy, he said that in order to accomplish this and maximize its impact, Tesla plans to continue increasing production volumes and the accessibility of its products. Additionally, the company plans to deploy 1,500 gigawatt-hours of energy storage annually in accordance with its various price projections. In a report published by Worm Capital researcher Cameron Tierney and his partner Eric McQuoid, a number of analysts also expressed their thoughts regarding the likelihood that Tesla stock will reach these price goals. According to all analysts, Tesla's technological advancements in artificial intelligence, software access, and vertical supply chain integration give it a competitive edge over other EV companies and automakers. As a result, it is likely that Tesla will dominate the S&P 500 by 2030. Positive predictions like this are expected because Tesla is an impressive EV company. However, while some analysts believe that Tesla's stock will do exceptionally well in 2030, others have expressed their opinions that these predictions may be too high. They also expect that Tesla's net income and free cash flow growth will accelerate in the upcoming years. With a concurrent expanding margin profile to accompany revenue growth, they further added that this growth will help Tesla achieve a compound annual growth rate of 50% by 2030. Senior alternative analyst Edward Sanchez of a strategy analytics consultancy recently disclosed that while these predictions